Hello, everyone. How are we doing today? Welcome to February. It's the year has been going so fast. I mean, just yesterday we were in January, and now it's already February. So, yeah, you can see what's going on in the market today. We just want to dive into the charts and also analyze where the market is heading next. So, I'm going to share my screen here. Give me 1 second. Okay. Okay. Uh, can you see the screen? Okay, go back. Okay, so first thing to note is that this is not a financial advice. I'm sharing my own opinions, my perspective on the market, and so it's not by any means advice and should not be taken as such. Take note, this is not a financial advice. So Bitcoin bounce or break down? Is it going to bounce at this level or is it going to continue dumping? So let's look at what we have on the charts. So you'll be seeing some things in the news like Bitcoin is going to zero or Bitcoin is dead. No, this is the end. Um, Crypto winter or bear market or Bitcoin has no future. You and uh, it's been on like this for a couple of years, so it's not going to be something new. I think every time there is a correction or a massive price decline, then you're going to see all sort of news. Or crypto is dead, or crypto is going to zero. Bitcoin has no future. The technology has failed. This is not the future of money. You're going to see all of them. But I want you to step away from the noise, the buzzwords, and then look at the charts, look at on chain metrics, on chain data, what's going on there. I think that will inform or paint a bigger picture for us to make good decisions. Okay, yeah, so you're going to see all sort of things like this. But let's look beyond this. So look at the macro environment around the world at this time. There's inflation, interest rates, and also global liquidity, global cash flow. Central banks balancing a tightrope between rate cuts and also fighting inflation. There's a lot going on behind the scenes. And so because of so many uncertainty, there's need to understand the basics, know the fundamentals. And what would that be? Let's look at the chart here. Uh, so this is the Bitcoin chart from 2010. Look at it. Can you see? Can you see this? Draw. Okay, let's draw. Okay. Can you see this? It's been it's been on the run, like massive run since 2010 to where it is right now. It's been a massive run. And every time you see an article saying crypto is dead or Bitcoin is dead, then it forms a higher low and pumps from there. For instance, look at 2019. All this is it. This is the end. And look at what happened. 2019, massive pump. 2020, you know what happened in 2020, right? It's obvious. 2020 here and then zoom. After reaching all-time high in 2020, 2021, and then 2022, bottom somewhere around 16,000. And from there, look at it now, all the way to 100 and I think 100 and 126 or so, about 126,000. And now trading somewhere close to 70, between 77 and 80,000, thereabout, 76 to 80,000, thereabout. So you can see that if you look at the charts, so the first thing you do when you look at any chart is to zoom out. Don't be buried within the 1 minute or 15 minutes time frame. Zoom out to the daily or the weekly, the monthly. So that will give you a broader perspective of what is going on. So next up, we have retail market volatility. What happens on the hourly, and then look at ETF inflows. It's increasing. It's been on the rise. It's increasing. This was from, I think, last year, and it's increasing. So all increasing. That means there's a lot of people accumulating at this time. When there is so much fear, uncertainty, and doubt, when there's fraud, then you see people accumulating. That's when smart money is buying. Okay, and next here. And when people are moving their coins off the chain, so cold storage, then you know that they are accumulating. It's just you're buying to hold, you are buying, keeping it in storage because you know it's going to bounce. Okay, so we're going to be looking at some technicals today. So price has dropped from here. It's no longer trading between 85 and 95K. So right now we are at, I think, about 76. So yeah, let's put 76 here. So no longer 85. Between 76 and 80K. So yeah, you put 80,000 over here. Cancel. Okay, cross. So between 76 and 80K. So there's a heavy resistance overhead. And now Bitcoin is actually trading below a resistance level, which is not a good sign. Not a good sign. So let's show the chart on the Binance exchange. So we'll share. See, you can. Okay. Oh, close, not this one. Go back. Sharing. Okay. Put it up a different chart for us to see. Sharing. So let's look at the Binance chart. Share screen. And, okay, this one here. Right. Okay, so this one here. So what do? When you look at the chart, the first thing is to zoom out. So now we are on the daily. So here, daily time frame. So we're going to zoom out on the daily. Now let's go to the weekly time frame. So weekly time frame, got a weekly time frame. So here we have the weekly time frame. Now this is the moving average. These lines that you're seeing here, the moving average. And I explained the moving average in our previous video. So if you've not seen that one, please go check it out. Thank you. I'm going to change this indicator, the 25. I'll change that to the 50. So let's change this to the 50 MA. Change to 50. Okay. And we're going to change this one to the 200. 200 MA. Okay. Okay. Great. So here, so this is the weekly. We have 50-week. Okay. Let's go to daily. Okay, so we can see yeah. So we can see here that we're actually trading below the 50 moving average. Like I said earlier, that's not a good sign. The moment you are trading below a key indicator like this, like the 50 moving average, it's not good. Now, if you are trading above that, so you are trading above it, the price is holding strong above, like from here. Let's, so you see all the way. So all this is an uptrend, right? So you can see it was on a massive uptrend and trading above the 50 moving average. So let's take that out. Go away. Okay. What's next here? So if you are familiar with the patterns, you're going to observe something on the chart here. You are familiar with patterns. Let's, oh no, remove this. Okay, let's move this down. Move this down. So there's a reversal pattern here going on. There's a reversal pattern. And how do we spot the reversal pattern? We look here. There's an M pattern that is forming. M pattern is forming. Let's see if we can put the reversal pattern. Oh no. Gonna pull that up. Okay. Okay. So go back here. No. Just friends. No, it's not coming. Okay. So you can see an M. When you see an M pattern, it means there's a reversal. Over here. Oh no, that's too far off. Let's go again. Go here. So this is M. You can take it this way as an M pattern, but I think it's a head and shoulder. So head and shoulder pattern. So here, sorry, the shoulder, then the head, and yeah, there's another shoulder here. Can you see that? So that's the head and shoulder pattern. Shoulder, head, shoulder. And go here, trend line. So if we draw a trend line here on the neck, somewhere here, the drop is going to be the height of this. So here. Then if you copy that, so copy that here. So that means there's a possibility that this would drop somewhere all the way to 40,000. So from 76, there's a possibility that it could drop to 40,000 because we are taking this and this. So that's how you read the pattern. Head and shoulder pattern. If this breaks, then it's going somewhere here. But of course, it doesn't go in a straight line or not in a day. It's going to take some time. And here, remember, we are looking at the weekly. So each of these candle represents 1 week. Someone is asking, what are we doing today? We are looking at the chart to see if Bitcoin DOM is over or if there's going to be a continuation. Okay, so here we see that there's possibility of a continuation because we formed the reversal pattern, head and shoulder. When you see a reversal pattern, then there is possibility of a continuation. So let's go to, so yeah, the price could drop to this point here. Okay, we can take that off. Yeah. Visible price action and inflows. So how do you tell it if this is a pullback or if this is a capitulation? We release one shot on that. So pullback or capitulation. So a couple of things to look at. One, you have to look at the chart. What is the chart telling you? What is it telling you? So at this time, looking at just the chart alone, you can see that there's a breakup structure. So you can see a clear breakup structure. And what does that mean? It means there's going to be continuation. So let's draw this again. I'm going to take this one out since now we know what head and shoulder means. So let's take them out. Take that out. Okay. Then you go on the 4 hour. Let's go to the 4 hour. Okay, so look at the 4 hour. Let's go to the daily time frame. Daily time frame. So here. So it's retesting the lows of, what was this low? I think 70 or 74, 74, 75. So there's going to be a retest of the lows. And if it breaks, next support level is going to be somewhere here at 60,000. Somewhere here at 60,000. So let's add the volume profile indicator to show where we have the gaps and where we have peaks. So go here. So look for volume profile. Oh, volume profile visible range. Okay, this one. Great. So can you see this? Let's go. First of all, let's go on the 4 hour. 4 hour time frame. So look at the volume profile on the 4 hour time frame. So most of the buying and selling activity took place around this zone. What's the zone? Between 90 to $87,000. 90 and 87,000 here within this zone. So you see the volume profile, you see this line. So it means that if you lose this line, it's bad news. And you can apply this to any chart. It's not just Bitcoin. You can apply it to gold, silver, what do you call it? S&P 500, Dow Jones, Nasdaq, anything. It applies anywhere. And remember, this is not a financial advice. I'm just giving my own opinion and perspective. So, and this is for educational purposes only. Educational purposes only. Thank you. So you see, if you lose this volume profile, like this peak, then there's a gap here. Really nothing is holding it. There's no support, nothing. And the price tends to hang tight to the peak. You see this peak here? It's like you're going down a valley. Like when you're going down a valley, then it's beautiful, it's smooth, right? But when you are going uphill, then it's more energy, more effort. So, but when you're going down here into the valley, it's a smooth ride, it's a free fall, So that's what is happening right now. On the 4 hour, it's going down the valley, it's going downhill. So we lost 88,000. That was a signal. It was a short signal. When you lose 88,000, that's a short signal. Okay. Look at the daily time frame. I think same thing on the daily as well. So can you see this? You have the peak of the volume around this zone, 90,000. 90,000. And there's a huge gap here. That means if you break above 90,000, there's a possibility that you'll retest around 108,000. But if you lose this gap, if you lose this, just the way we are losing it right now, then it means more downside. Now we're going to apply the same volume profile to the weekly. So let's go on the weekly time frame. Weekly time frame. Look at the weekly. So on the weekly time frame, we are right in the valley. So we are going downhill. And what that means is that you can't stop until you go uphill. So that means you can't stop. You can't stop in the valley. In fact, that's where you go the fastest. So the price is going to go all the way. You see this line here? The volume profile is showing that 63,000 could be the next support. 63,000. Where are we right now? 76,000 or 75.5. Sorry, 76.5 or 76.6. And it's showing that the next support is around 63,000. Is that a short call? It's up to you. But the volume profile is showing a big gap here. Okay. So yeah, so one thing you look at, if it's going to be a capitulation or if it's going to be a pullback, then if the market structure is still in place, then you know that it's just a pullback. So for instance, let's go, I can move the volume profile now. Let's take that out and look at the chart again. So here, price point from 42,000 all the way to 70,000 or 73,000. This is a pullback. This one, that's a pullback here, right here. So here, that's a pullback, right? And let's go here like this. And it's forming a, can you see? Bullish, the bullish wedge. So when you see a bullish wedge like this, then you know that we have more upside. There's more upside coming. And this is a pullback, right? Just a little correction, but you are still going in the direction of the trend. Here, the trend is upwards. From here, you can see that the trend is upward. Let's put a line from here. Yeah, put a trend line here. Great. So can you see the trend line? So this was acting as a support. A bounce up here, bounce up here, bounce here. So, but you broke that trend line. The moment you, at this point where it broke the trend line, that was already an alarm bell, you know, for you to know that there is a change of direction. So a change of direction. So a pullback is in the continuation of the trend. When you break the previous low, like here, this is one low. Let's go. So there's a low here. There's another low here. So what we're looking at now, so you are forming higher high. There's a high here. There's another high here. So higher high, higher low, higher high, higher low. That's good. There's the final high here. Now, where's the low? Look at it. So we are right here, right here, right here. Now, if we reverse at this point, it's still not bad news. It's still good. Why? Because this low and this low, they are kind of the same. But like I said earlier, there's a high probability that it's going to break this low. So the moment you are breaking this low and breaking down, then you know that you've broken the structure. So there's a change of character, and the next time, or we can even count this one as an high. So here there is a lower high. So when you form a lower high and you've broken the previous low, then you also form a lower low. So and the market continues in that direction. So you keep forming lower high, lower low. Then that will give you a downtrend. So you have a downtrend, just the way you have an uptrend here, then here is going to be a downtrend. So it seems that is the direction where this is going, just looking at the chart alone. But remember, you can't use one indicator to make a decision. You need a confluence. So either you're using this price action, you're using the moving averages, you're using the stochastic or just the regular RSI, or you're using the MACD or the fib retracement, or you're using the Bollinger Band, or you're using the waves, Elliott waves. So it must be, or it should be, a combination of indicators. There should be a confluence. So what we are seeing here is that there's a high chance that this will continue to the downside. Okay, continuation here and here. So let's go to the smaller time frames, like the 15 minutes. So 15 minutes, again, we have massive selling here, and there's a shadow, a long shadow. So this shadow will be filled, this week will be filled. The price at this zone is about 75.5, just like $1,000 from where it's currently trading right now, 75.5. So high probability that it will come back down here to fill the week. Okay. You go on the hourly charts, I think it's the same thing. Yeah, there's a week here, so it will fill up that week. daily, and then the weekly chart. So yeah. What else do we know? So look at this rejection. So let me clean out this. Delete minor indicators. Yeah. Let's let's remove the drawings. Remove 19 drawings. Yeah, let's remove all the drawings. Okay. So this is the moving average, 50 moving average. Every time that you lose the 50 moving average, you are heading, no, delete that. You are heading to the downside. So in 2022, in March of 2022, at this point, look here. Go up. So March of 2022, BTC lost the moving average, the 50 moving average. And guess what happened? So the price was at 48,000 and it went all the way from 48,000 to 17,000. So from 48 to 17. Now history is repeating, or should I say we are repeating history. BTC is repeating history. Same thing here. So this is the 50 moving average around 101,000, 101, about 101, or let's just say 100,000. Psychological value of 100,000. Losing this value, this area, 100,000, will send you tumbling down all the way to about 60,000 here, right here, because that will correspond to the previous support zone right here. And it also aligns with the 200 moving average. We got the 200 moving average right here, 200 moving average. Okay. Moving average. I'm going to share this chart as well on, show us what we have on trading view. So let's go to trading view. In the charts, I'll show a different screen. Trading view. Okay. Okay, let's I will share. I can see. Let's move this. So move it here. Sure. Cancel. So let's go find BTC on this. Okay. Okay, thank you. You can see down window BTC is the Chrome edge. Okay. We're sharing now. I'm sharing now on, so this is the trading view chart. So can you see what's going on here? This is we are on the weekly time frame. So the weekly time frame trend line here. So this one is broken. You can see that it's broken, and there was a retest here as well. Am I frozen? Okay. So there was a retest here. They retested this value at 98,000, rejected it, and now it's fighting the support. It's just right at support. Look at this trend line here, from here to here. So that's the trend line. Now it's touching it right now around 76,000. So between 78 and 76,000, retesting that trend line. Now, if this breaks, which most likely it will, then you are looking at the next stop is going to be around 60,000. So around here will be the next stop, 60,000. So how do we determine that? How do we know that? Because it was a previous demand zone. This will act as support. The demand zone will act as support. Okay. So another thing to look out for is the DXY. The DXY tracks the value of the US dollar against other major currencies, six other currencies. So if the DXY is in a good shape, that means if it's uh, in an uptrend, then bad news for BTC, bad news for the market. But if the DXY is in a downtrend, then good news for the market. So let's look at the DXY, the dollar index. So go here. So we go on the, let's delete some of the trend line. So there's a local uptrend here and it broke. So you can see it broke March of 2025. And also we have a local support here. Go back. So there's a local support. Now if you extend this line, so let's extend this trend line here. And then maybe come down a little bit, 2025. And now we are in February of 2026. So there could be a one retest maybe in June, but then in August or so, then there will be a breakout. Now, the moment DXY breaks this resistance, you can see that it'll go into another uptrend to retest this high. There's a high here, here. Starting to retest this high. And if it breaks this high, of course, what's high here? Then it will attempt to retest that high as well. But what normally happens is that there is now another trend line. So let's move the chart a little bit. Okay, so we move this trend line here again. Continue. The moment it breaks this trend line, that's bad news for Bitcoin and the rest of the market. Bad news. If the XY breaks this level around 105, no, it wouldn't look good for Bitcoin. You can see this bullish. So most likely the trend is going to reverse in the upward direction. Reversal. Okay. So that's the DXY. And a lot of people are pumping. Is this pullback? Is it capitulation? So I've shown us what to look out for to know if it's a pullback or if it's just a pullback or if it's capitulation. So let's go here. So yeah, so you look at the chart. The moment the structure is broken, so here is the trend line. Trend line is broken, so that is an alarm bell going off here that the market is reversing. So when you're reversing a different direction, then you know that it's not just a pullback. There's a possibility that there could be capitulation. Now, another thing to look out for is the volume spike. So volume spike, huge volume like here. We have huge volume, and here we have another volume spike somewhere here. So you can see this is not good, showing capitulation. And when there's capitulation, it means everybody's selling. There's massive fear. There's people are surrendering to the market. Even if you bought your item for $100, now you are selling at $5, $10. Everybody's just selling. So that's what happens during the capitulation. It means a total surrender to the market fears. Okay. What are the other indicators you can look out for? So let's go on the smaller time frame. Oh, another one is the fear and the greed index. Okay, so let's go Stop sharing. Let's share a different screen. So going to look at the fear and greed index. Fear and greed. So we'll share window. Okay, so here's the fear index, and you can see the value is 14. 14. So that's, of course, see from this, where you're going into the orange side on the left. So that means extreme fear. Look at it. So you're looking at extreme fear, 14. Yesterday was 20. Yesterday was even better, 20. Last week was 25, and last month 28. So that means today it's everyone is panicking. People are selling. That's why the price now is around 70. I think 77, or let's check the price. Uh, um, yeah, around 77, 77,000, 77. Yeah. So that's what is happening because the fear and greed index is showing the level of fear versus greed. When there is fear, everybody's selling. The retailers are selling. The retail investors are selling. But smart money is not selling though. Smart money is buying at this level. That means institutions are buying when there is a lot of fear. But here, when there is a lot of greed, then then that's the time to sell. That's the time to sell and to get out of your position because there's a lot of greed in the market. Let's go to the chart. So look at the fear and greed index chart. So remember this, every time you are looking at the chart, the first thing is to zoom out. So we're going to do that here. So this is on the, what is this? 7 days or one month. So let's go to the 3 months. 3 months. Okay. Then we'll go to the 1 year. So that's the best thing to do. Always zoom out so that you have the big picture. Then we go max. Look at that. Look at that. So we are approaching uh, very low number somewhere here. Anything below 10. So the moment this drops, the fear level drops below 10. That means extreme fear. People are panicking. They are selling everything, running away. You know. But every time it drops below 10, then that will be a good time to start accumulating. That means to start buying back. That's what that's what they do. The institutions, they start buying here when it drops below 10. Because at that point, there's extreme fear. Everybody's selling. And they are selling for cheap. The value is 14. So it's kind of getting there. It's getting there. And today is what? February 1st. And the value, fear and greed, is 14. So watch out for this fear and greed index. You can just type it, search it, fear and greed, and it will come up. Fear and greed index. So you can see here, extreme fear can be a sign that investors are too worried. And that could be a buying opportunity. Take note of this. It could be a buying opportunity. Remember, when there's extreme fear, that could be a buying opportunity because everything is on sale. You know. Then, but when investors all-time highs, that means the market is due for a correction. If you are seeing all-time high for BTC at 126K, 120, 125K, also 126K, then be careful because it means it is getting ready for a massive correction. Another thing to look out for is the hash rate. So let's look for the hash rate, the mining hash rate. And okay, so for BTC mining hash rate. Okay. So I'll share that. So we have the the Bitcoin mining hash rate. So if the hash rate is at all-time high, that means the rewards are they are excellent, because for every block there's a reward, about 3 BTC or so for every block that is mined. So when you see the hash rate, so if you come here for Bitcoin hash rate, then first thing, remember what I told you. Every time you're looking at any chart, go and zoom out. So we also go to the 3-year chart, or go to the all time, uh, select all. It shows the chart pattern for all time. So you can see here at this peak, it's showing October 13, 2025. The hash rate was at all-time high. That means there were a lot of miners, a lot of nodes keeping the network secure. And of course, they are getting the incentive, the reward, about 3 BTC or so for every block that is mined. Now, what that means is that the moment you are seeing this mining rate at all-time high, it's time to be very careful, because it means that you are approaching the peak of that run, the peak of that cycle. So this was what? October, let's see, October 13, 2025. So let's go here. What was the price of Bitcoin around October 13, 2025? So we were, look, can you see what's going on? I'll go back. Let's go to the daily charts. Yeah. So around October 13, 2025, this is October 10th. Look at that. October 10th, we were somewhere around 123. And October 13, we are around 115. So what the mining rate is telling you is that around 115 is telling you, you know what, it's time to sell. It's time to pack your bags, because there's possibility for a reversal. Because the mining rate is at the all-time high. Look at it, all-time high at somewhere around October 13, between October 13 and October 20th, that area. So, but now you see the rate is coming down. So the incentive is reducing. So less miners involved than before. So yeah, those are the things to look out for. Let's do a quick recap of some of the things we've discussed today. So one is the general market sentiment, understanding the sentiment. Where are things going? You look at the big picture, the economy, the inflation, interest rates, all that is impacting the price and the performance of Bitcoin and other cryptocurrencies. Then we also discuss, is this a pullback or is this capitulation? So it's looking more like capitulation, because the market structure is broken. For a pullback, you see a little price drop, but then it continues in the direction of the trend. But here it's very clear that we are no longer, well, I won't say we are no longer, we are more or less at the support. And that's not a good sign when you are fighting with support. It's not a good sign. So you see the uptrend here. It's an uptrend. So that uptrend is broken. So when the uptrend is broken, then you know that it's not a good sign. So it's more tending towards capitulation. Volume spike. You see a huge volume rising in the market. Look at, and they are all red volumes. So red volume. That's not good. It means a lot of people are selling. Now, look here. You see volume spike, but it's green volume. That's good. That's a good sign. So April of 2025, there was a volume spike, but it was a green volume spike. That means a lot of people are buying. So that's a demand zone. It will form a support for the market. And look at what happened. The price was around 77,000 and rallied from there all the way to 126,000. So that's what we're talking about. When you see volume spike in the market, identified, is it a green volume spike or a red one. If it's a green one, that's good. Same here in November of 2024. Green volume spike here, you know, look at what happened. From 67,000, same thing, rallied all the way to 109,000, thereabout. But here we are seeing a red volume spike, so that's the opposite. When you see a red volume spike, it means a lot of people are selling. So instead of running upward, it's actually going downward like this. That's what it means. Okay. Uh so look at the volume, look at the market structure. Is this in place? Look at the fear and greed index. What is the fear and greed index? Right now we are 14. So extreme fear. Okay, that's not good. They look at the BTC hash rate, the mining rate. Is it at all-time high? Is it on the decline? So from here we can see that it's on the decline. So this is the uptrend. You can see the uptrend, but now it's also fighting this kind of going back somewhere here to this support zone. So it's more in the no longer price, no longer in the uptrend. Now it's in the downtrend. Okay, so those are some of the things to look out for. Then the DXY. Don't forget the DXY. So if the DXY is doing very well, as a coin market cap. If the XY is doing very well, then you know that BTC will not do well. Bitcoin will not do well. But if the XY is not doing well, then that's when, so it's kind of the opposite, right? Because it means that if the XY is doing well, then people are removing their money from volatile, high risk asset like BTC and putting it into the dollar. They're saying, okay, I want a safe haven, you know. But if the XY is not doing well, it means people are buying more of volatile assets, you know. This is the market cap, coin market cap. It shows the market cap of all the cryptocurrencies. So you can see here it's 2.58 trillion. So let's just say 2.6 trillion, yeah, approximately 2.6 trillion. So you can see it's super high, $2.6 trillion. And BTC alone is about $1.5 trillion. BTC alone. What is the GDP of your own country? Is it up to the market cap of BTC? Let us know. What is the GDP of your country? Uh, where you're watching from? Is it up to the market cap of Bitcoin? Or is it up to the market cap of the entire cryptocurrency market? Let us know. Okay, so that's the key information, the key takeaway from this live stream. So every time you look at the chart, the first thing you do is zoom out so that you have the big picture, understand what's going on. And you can use indicators if you want, or you can just watch the price action without any indicator. The price action will show you where there are support zone and where you have resistance. So if you're trading in a channel, you know that the resistance above you, the support is below you. Another thing to look out for or to notice that for the indicators like the moving averages, they act as a magnet for the price. So if the price is very extended or overextended from the moving average, then there is going to be a pullback or a correction to the moving average. Then when it bounces on that moving average, then it will now gain momentum to continue. So it's just like a support. It's like someone or a child bouncing on a trampoline. The higher you go, or yeah, the more you push down, the stronger you push down, then the higher you go, the higher you bounce. So the same thing. If it's going to bounce off the moving average, then the price will explode. But if it falls through, same thing. If the trampoline breaks and the child falls through, then that's bad news. Not covered. Share. So that's our presentation. Which tab is the presentation? Okay, screen. Yeah. Okay, let's see if you can share the presentation again. Okay, good. Okay, so the presentation now, presentation deck. So you can see here, visible and invisible flow. The difference between the panic, the noise, which is have head and shoulder pattern, is going down. You see this arrow? It's going down. You have a double top pattern. It means a reversal pattern as well. It's going down. You have a double bottom. Then double bottom is going up. That's what it means. So if you have a double bottom, then it means it's going up. Now let's see. I'm going to share the two. Can I share two? Okay. I'll show you side by side with the VCD charts. Okay, let's see. We can share two. Entire screen. Okay, great. Stream one, stream two. Okay, yeah, sure. So now I can come move this side by side so we can see. So minimize. Okay, minimize here. And shoulder pattern. So where's that? So this one, the head and shoulder. Move this up so we can see clearly. So you see the head and shoulder. BTC is forming this. So head and shoulder right here. That's a reversal pattern. It's coming down. One, head and shoulder. So this one shoulder, left shoulder, head, right shoulder. Now, if you see a bullish flag, if you see a bullish flag like this, then you know that is a bullish pattern. You see a flag like this. So let's like this flag here, here. So it means there's more upside. So even if we didn't see this side, we already know that there's going to be more upside. Why? Because there's a bullish, that's a bullish flag right here. So here, this one, that's a bullish flag. So let's go draw. So here, so we're talking about this one now. And we can see it on the chart here. So bullish flag. Now another thing to look out for is uh, there's a falling, there's a rising wedge. It's a rising wedge. When you see a rising wedge, do we have that? Let's see. Break of structure. I've explained this before. So Bitcoin has broken the structure. It's no longer in an uptrend. It's fighting support. So it's struggling with support, which likely is going to break. When the support breaks, then that's what we call the break of structure. You can see here. So break of structure is when it continues in the direction of the trend. So here, I pull back, continue, pull back, continue. Then change of character. Change of character is a reversal of the trend. It's like the uptrend has come to an end. So now it's going to be a downtrend from here. So when there's a reversal of the trend, it's a change of character. It's like when someone changes their behavior, right? We say, oh, you've changed. You're not like this before. So same thing when we look at the chart and we say, oh, you're no longer going up. You're no longer, increasing. You're decreasing. So there's a change of character right there. And for Bitcoin, we can compare at this high of 126,000. Next high, the last high was here at 100 and where is this high? Sorry, at 98,000. So 98,000 was the last high. So that was a lower high. So there's a high here, there's a lower high, and it's about to form a lower low. There's a low here. There's a low here at 77,000, 76,000. Yeah, this area, 76,000. So it's about to form a lower low here. The moment it forms a lower low, then we have that confirmation of a change of character. And we know change of character, it moves more to the downside. Okay, lastly, what else do we have here? So okay, the volume profile. I've shown us how to use the volume profile. And what else? The XY. So yeah, we've also discussed the DXY and the volume profile. So that is all that I have for today. Thank you so much for joining us. Ensure to subscribe, please. Subscribe to this channel, like and share our videos. If you have any chat you want us to look at, put it in the comment section or put it in the chat here. And we're going to look at that in the next live stream. Uh, there's So now we are scheduled on Sundays 3:30 p.m. CST. If you prefer another time, let us know also in the chat or in the comment section. Maybe we can move things around and see if we can put it on another time that works best for most of us. So thank you so much. This is the month of February, guys, and 1 month is already gone. And how are you doing? How are your plans coming along? Your New Year resolution that you set out in the beginning of January, are you still following through, or have you thrown it out of the way? Have some people after they miss one or two steps, they say, "Oh, you know what? I give up. I can't do it." No, I want you to go back, review your plans again. You can make adjustment where necessary. There's make some changes and continue because you it's just 1 month gone. You have 11. You have 11 months. There's a lot you can accomplish in 11 months. So I'm encouraging you. So don't give up. Be strong and keep going. Be strong and keep going. So we're going to end here for today. Thank you so much for joining us. God bless you. And you have a good week. Bye for now.